Right. Today, uh, right. Hello. How are you? I think previous chapter you would have gone through, and you have gathered some sort of ideas. So we will come to recoverable bad debts under the recoverable debts, irrecoverable debts. Example 2 and example 3. We are going to discuss this one. And first of all, we will see the example 2. Already we have gone through the exercise 1 and exercise 2, rather than saying examples, exercise 2 and exercise 3. Okay, today we are coming to the exercise 2. Okay, so shall we see what is the requirement of the question, right? So here they ask you show the relevant accounts and extract of the profit and loss account and balance sheet, right? This is the requirement of the question, right? So having that in your keeping that in your mind, just go through this question. Facts, what are the facts given to you, right? Now you know what are the accounts, the show relevant accounts and extract of P&L and balance sheet. That is the requirement, right? Now go through the facts given to you. Okay, so we are doing the irrecoverable bad debts. Irrecoverable bad debts means the relevant accounts are accounts receivable, allowance or provisions for the debtors, bad debtors, and irrecoverable bad debts. Okay, so the fact is Billa started business on 1st January 2021. Okay, he is starting the business on 1st of January 2021, right? This is the Billa's January 2021, 1st of January 2021. As at 31st December 22, the relevant balance on this receivables account was 18,000. So the normally the financial period normally ends after 12 months, consists of 12 months. So if it is 1st of January starting, beginning is 2021, in the sense the closing at the 31st of December 2021. Okay, not 22, 21. Okay, so you say the balance on this receivable account was 180,000. Just open the balance account. Okay, receivable debtors. Okay, open a receivable debtors account. Okay, this is the debtors. Here debit, here credit, CR, and receivables account or debtors. Receivable accounts or debtors or debtors account, right? So the there says balance on 31st of December receivable account was 180,000. Balance brought forward 180,000. 180,000. That means we have to receive from debtors 100,000 rupees, 180,000 rupees. That is meant by that, right? Debtors. On investigation, this was found to include the following debts. we have carried out an investigation, right, to see whether it is accurate. During that course of action, they have found four transaction that had not had an effect on this. First transaction, number one transaction, that is A. Bimal owed 10,000, which is irrecoverable. Bimal owed 10,000, which is irrecoverable. That means bad debt. Okay, we are showing at the bad. We had to open a bad debt account. Irrecoverable account. This is DR. This is CR. This is irrecoverable account. Account. This is irrecoverable accounts. Irrecoverable bad debts. Okay, bad debts. Recoverable debts. We can say recoverable debts rather than saying bad debts. We have to say irrecoverable debts. Debts account. Right. So Bima owed 10,000, which is irrecoverable, means debtors account, bad debts account, debit, right? This is provision for bad debt. This is debit, this is CR, this is allowance or provision. Or provision. Provision for bad debts. Okay, provision for bad debts. So first transaction, say they identified Beamer owed 10,000, which is irrecoverable. Irrecoverable account debit 10,000. Okay, that is provision for bad debts. Provision for bad and doubtful debts. Doubtful debts. Okay, bad and doubtful debts. And recoverable account, that is allowed, bad and allowable allowance for provisions for bad debts account has to be credited 10,000. Saying irrecoverable account, irrecoverable bad debt account, irrecoverable bad, irrecoverable debtors. Okay, that is 10. So for the A, we have finished the double entry. For B, Anas owed 5,000 and is a doubtful debt. Anas owed 5,000, which is doubtful debt. So it is doubtful whether we will receive or not. We don't know. Anas. So we had to recoverable account debit 5,000, right? Provision for bad debts. Anas. Okay. And provision for bad debts account credit. No, no. Here, Anas owed and is doubtful debt. It is which is irrecoverable. Irrecoverable in the sense, irrecoverable in the sense, you have to credit to the debtors. Okay, not to the allowance account. here for this recoverable account debtors, we have to write it off directly to the irrecoverable. That means receivable 10,000. That means this is, you have to give a narration reference receivable debtors. Here you will say irrecoverable debtors. First, we will say B man owed 10,000, which is recoverable. He owed 10,000 to us, which is recoverable. Means we cannot receive, we cannot recover that amount. We cannot recover that 10,000. It is not a doubt. We cannot recover. In the sense, we are going to write off it from the receivable debtors account credit, and debit for recoverable debts account, that is 10,000. Okay, that is the entry here, right? This one you forget about it, and we come for the B. Anas owed 5,000 and is a double doubtful debt, right? Anas owed 5,000 and is a doubtful debt. Doubtful debt in the sense we have to provide a provision. Okay, irrecoverable debtors 5,000, 5,000, and allowance for provision for bad debts 5,000. Recoverable debtors 5,000, and allowance for provision for bad debts is 5,000. Creditor, right? Number 3, that means C. Varma owed 2,000, which is irrecoverable. Varma owed 2,000, which is irrecoverable. That also like that. Irrecoverable account debit 2,000. Okay. Provision for bad debts. This is not Anas. This is Varma. Okay. Here you say irrecoverable debtors. That is 2,000. Okay. That is 2,000. So Varma owed 2,000, which is irrecoverable. Okay. Varma owes 2,000, which is irrecoverable. For that also we made a entry. Okay. And number 4th entries, that means D's fact number D is Amal owed 3,000 and is doubtful debt. Anas owed 3,000, it is doubtful debt. Means so it's irrecoverable means here, not here. Again, confusing. I am confusing you. Okay, don't confuse it. Here we will say number C is Varma of 2,000, which is irrecoverable. Irrecoverable means we cannot recover, right? So recoverable Varma of 2,000, which is irrecoverable. 2,000 credited to debtors, say recoverable debtors, and here you will say receivable debtors, receivable. Okay, receivable 2,000. Right, understood? It is irrecoverable. Varma owed 2,000, which is irrecoverable. We cannot recover. Came to the conclusion. We come to the conclusion that we cannot recover it. based on some facts, right? And D, Amar owed 3,000 and is doubtful debt. 3,000 doubtful debt. We don't know whether he will pay or not. We don't know whether he will pay or not. So here recoverable account debit 3,000, right? Provision for bad debts. Amal, right? And here recoverable debtors is 3,000. Okay, 5,000 and 3,000. So we have completed the double entry for the this particular identified transaction during the investigation. So in addition is he has been decided it has been decided to have general allowance of provision for receivables of 4% of remaining balance debts. Remaining balance debts. It is decided to have a 4% of remaining balance debts. Remaining balance in the sense carrying down balance. Understood? Carried down balance. So here we will say balance carried down. Carried down. Right? Here total is 180,000. 180,000. Right? Here total is 180,000 minus 12,000 in the sense 168,000. Okay, 168,000. So here balance brought forward 108 168,000. 168,000. Okay, understood. So next adjustment, in addition, it has been okay, it it had been decided to have a general allowance or provision for receivables 4% of remaining balance. Remaining balance for 4%, we are going to make an adjustment. So how do you, how can we calculate? Okay, how we can calculate this one? Hmm? Can you understand? Yes, I will show you the calculation. Right. First of all, we will say this is recoverable debtors, right? Recoverable debtors. Okay. So first of all, balance debtors carried down balances 168,000. Right? Debtors balances 168,000. Right? We have to make an what you call provision for that. 168,000 into 0.04 That means provision, right? Provision on, wait, wording is right. Provision or allowance. Allowance or provision is 68,000 carried down balance now. 168,000 into 4%, right? That means that means 6,720. 6,720. Okay, we have made an, we can calculate it as an carried down balance 6,720. But having said that, you have to see here already we have made a provision for amounting to 8,000. Understand? We made a provision for 8,000, right? Bad debts, okay. Bad debts written off 12,000 directly. We don't need to calculate the uh, what you called the allowance. Don't, we don't need to calculate the allowance. We have to remove the allowance for these 1 to 8,000. 8,000, right? Remove the allowance provided. So in this 168,000 we have calculated the this amount, right? Because they are not going to pay the amount provision we have made. So less provision provided, allowance allowed, allowance or provision deducted, provisions made. Okay, this is 5 and 8,000. That means 5,000 plus 3,000 into 4%, right? That is 6,720. That is separate. 8,000, sorry, 7,000, 8,000, right? 8,000 into 0.04, that is 320. 320 you have to deduct it, right? You have to deduct the 320 because these two, for these two we have already calculated general provision. We already made it, so we have to deduct this one. Okay, then 6,400 and 400. Okay, 6,400. So for this 6,400 we have to make a provision, carried down balance. So plus 6,400 plus another provision at provision 5 and provision 3,000. Okay, and 400 and 8 14,400. Here carried down balance should be 14,400. Okay, here the difference is 14,400, 14,400 minus, okay, 6,000, 14,400 and so means 8,000, 6,720, right? 6,720. 6,000, sorry, 400. 400. Here brought forward is 6,400. Okay. Here we will see we have to say recoverable bad debts. Irrecoverable bad debts. Okay. Bad debts. Here we will say allow, allowance for allowance or provision for bad debts. 6,400. Okay. Here total is 10,000 plus 5,000 plus 2,000 plus 3,000 plus 6,400. Then 26,400. 26,000. This goes to P&L, profit and loss account. 26,400. Okay. Have you understood this one? Hmm? Have you understood this one? Because we are we had to balance the receivables 168,000. Okay, 168,000. This is totally, these two totally removed, right? 12,000. So we had to deduct the 12,000, then 168,000 the debtors. From the 168,000 only we had to calculate the general provision. We have calculated, that is 6,720. In this 168,000 we had a provision for 8,000 and 3,000, 5,000 and 3,000, 8,000. Okay, if that is the case we had to revise that. We had to remove that provision made for 5,000 and 8,000. That means 320 we have to remove it from the total amount, that is 6,400. This 6,400 we have to charge it here. Okay, allow allowance or provision for bad debts. 6,400 we have to charge it to the P&L because we have to make a general provision for person, right? Apart from the specific provisions made for people. These are the specific debtors. Completely we cannot remove. That's what we cannot receive it. That's what we have charged it directly for the provision. Whole amount we have transferred to the provision account. Other than that one, we have to make a general provision. That is general provision here 6,400 for person. That means 6,400, right? That's 6,400 we are making here. This total amount will go to the balancing amount will go to the profit and loss account. This balancing amount will go to the profit and loss account. That is a loss for us because we cannot able to receive it. Okay. So under the debtors, non-current assets, right? In the statement in the statement, we will prepare the statement of balance sheet. Okay. Statement of balance sheet under the current assets. Okay. Under the current assets, under the current assets, uh, trade debtors, receivables, right? Receivables. You will say receivables 168,000, right? Less allowance or provision for bad debts. It was 14,000. My God, my goodness, it's bad. It's terrible. Okay, it is carried on and here brought forward balance 14,000, 14,400, 400, right? 14,400. You have to deduct it and show. So if you want to deduct it, 600, 3, 5, 153,600 is the residual balance that will be shown under the statement of balance sheet. Under the statement of profit and loss account, under of profit and loss, income will be there from or revenue, right here, less less expenses, admin expenses. Okay, distributable expenses, distribution expenses, expenses. It is shown Bad debts. Bad debts. We are showing the bad debts. Bad debts where here is the bad debts. 26,400. 26,400. Another, from the income we have to deduct this bad debts 26,400. Understood? Have you understood how do we calculate this one? We have calculate that 4% on a general balance, general provision on the carrying down balance. Carried down balance consists the provision of these two. Okay, these two. We are removing those two provisions, 5,000 and 3,000. Removing that 4% of that. That is a 6,500 for other provision for other debtors. We are calculated and made the provision here. Okay, this has to be removed. This has to be shown under the PNL. That's what this is PNL, debited to PNL. These are shown under the balance sheet. Okay, understood? Shall we move to the next exercise? Okay, we will move to the next exercise. This exercise also, this is the first year, this is the second year. This is 2021, this is 2022 transactions. Okay, so we will see the second one. Exercise 2. During the year ended 31st December 2022, Billa had made sales on credit 600,000 and had received cash from customers 238,000. Okay, he made the sales. He had a debtors balance 600,000 and he had received 238,000 cash. Uh, so shall we made that receivable part is very much higher, no? So I shall we made this question as 400,000. Okay, more 400,000. So he made sales of 400,000. He had a debtor balance 400,000 and he had received cash for 238,000. These amounts had been entered into the receivables account. Right? We cannot be receivables. We made credit sales 400 and received 230. Okay, it can be done, right? 400,000 and we had received sales amount 238,000. These amounts had been entered into the receivable account and balance entered on investigate balance extracted, right? And balance extracted on the investigation following discovered. Right? Following discovered. What are the accounts? The same accounts we are going to open it because with the continuation of this one is that one. Okay. So we have to open a receivable debtors. Receivable. This is DR and this is CR. Receivable. Okay. Balance brought forward. Brought forward 168,000, right? And here allowance for provision for bad debts, right? Open the other account. This is DR, this is CR, and allowance, allowance, allowance or provision, allowance for provision, bad bad debts, right? Right. Other one is recoverable debtors. Irrecoverable debts. This is DR and this is CR. Right? Irrecoverable debtors. Right? Here balance brought forward is 14,000. 14,400. Understood? 14,400. These opening balances you have to take it up. You have to put it right. These two will have a opening balance because why? These are the assets and liabilities. So we have recorded those things. Okay. Then we will read the question. Required one is not show relevant accounts and extracts of profit and loss account and balance sheet. Okay. Before you we had to show that before showing the accounts and right. Okay. We had to prepare the accounts also. No? Okay. During the year ended 31st December 2022, Billa had made sales on credit for 400,000. Credit sales. Then how it comes? Credit sales. Debtors account 400,000. Sales account credit. Okay. 400,000. Sales. Okay. He had made the sales. Right. For that we can prepare the double entry for the sales cash account that is not needed here, right? Cash account is not needed. They didn't ask the cash accounts also. Here receivable accounts is debited and cash account and the sales account is credited. Sales account not needed here, right? Otherwise we can show it, no problem. Okay. Here we will say sales, right? Sales account credited 400,000. Okay. And 200 from which the customers paid 238,000. Cash account 238,000. Understood? So cash account 238,000. This is the double entries. Okay. So these amounts had been entered into the receivables amount and balance extracted on the on the investigation following discovered. Billa had uh, had still not paid the 10,000 and must now be regarded as irrecoverable. Villa Villa had still not paid the 10,000 and must be regarded as recoverable. Then irrecoverable means recoverable debts account debit 10,000. That means receivable. Who is that? Villa. Okay, Villa. And receivable account credited with 10,000 means irrecoverable debtors. Villa. Okay, 10,000. Double entry, a simple double entry we have passed because we have found the following information during the investigation. Following are discovered. Billa had still not paid the 10,000 owing and must now be regarded as irrecoverable amount. Now it is included here. Billa still not paid the 10,000 owing, right? Still not paid the 10,000 owing. We are going to remove that because he is not going to pay. So credit debtors account credit and recoverable debts debited. Okay. And second one, Anas had paid his debt owing to 5,000 in full. Anas had paid his debt of 5,000 in full. Right. Here there is a note has been given. Here note is given here. Shall we read the note also? Right. The amounts received from Aman and Anas are included in the total cash receivables for the year of 238,000. Right. The amounts received from Aman and Anas are included in the total cash receipts of the Anas and Aman. Right. Anas had paid his debtors amount in full 5,000. Right. He had paid his 5,000. Anas had paid. These amounts received from Anas are included in the total cash receipts of the 230. It is included here. Cash account is included here. Right. Anas had paid his debts for 5,000 in full. Right. And the amounts received from Aman and Anas are included in the total cash receipts for the year of 238,000. It is included in cash receipts, but I think recoverable accounts uh, bad debts account. Okay, it's okay. It is not going to affect the this account, right? Okay, Anas one had paid his debts. It is not going to have an effect here. Third one, Bingo was owing 8,000, right? Which is irrecoverable. Bingo's one. Anas one is already we have removed, no? Anas receivable. Anas had paid his debtors 5,000 in full, right? So we have to remove him from the debtors, right? 5,000, because cash has been included in the cash, 238,000, right? So that is the main thing. So bingo was owing 8,000, which is irrecoverable. Bingo is 8,000, is irrecoverable. We will say here 8,000 account recoverable bingo 8,000, right? So recoverable in the sense we have to charge it to the creditors, the debtors. 8,000 recoverable debts. Recoverable debts. Okay. Who is that? Bingo. Bingo. Okay. 8,000. This adjustment we will say. I think this won't have any effect. Right. Bingo was owing 8,000, which is irrecoverable. Right. We made irrecoverable in the sense receivables account credited and recoverable accounts debited. Okay. Anas had paid, we leave it. Bingo. Aman had paid 4,200 of his previously recoverable debts. We do not expect or receive any more. Right? He has paid 4,200. Right? Aman. Here we said in the note the movements received from amounts received from Aman and Anas. Right? We just underline it. Aman and Anas. Aman and Anas. Right? Aman and Anas. Where are Aman and Anas involved? Here Anas is involved. Where is Aman involved? Here is Aman involved. Okay? Aman had paid 4,200 of his previously irrecoverable, right? Irrecoverable means already we have charged. Irrecoverable account. So Aman paid 4,200. Irrecoverable account credit 4,200, right? And receivable account debit. Okay. Receivable account debit. That means recoverable bad debtors, debts, recoverable bad debts. Okay, okay, debts. Who is that person? Aman. 4,200. Because you know why we have to make a adjustment. We have received the cash. It is included. They have said the amounts received from Aman and Anas are included in the total cash receipts. In the total cash receipts of 238, this amount has consist of cash received from Aman and Anas. Okay, cash received from Aman and Anas. Okay, so this is for Aman. Why we have to make an adjustment for the Aman? Because we have made written off for the irrecoverable amount had been written off already from this account. That means irrecoverable debts had been debited. So we had already debited, and here debtors account we have credited. So we have to reverse that entry because we have already received that cash account is received. We have transferred that amount to receivable debtors. We are removing here. That means receivable debtors account debit 4,200. So this one will have a double effect. This will contra interest. Okay. Here receivable debtors, irrecoverable debtors is credited. Then amount chargeable to the profit and loss account will come down. Amount chargeable to the profit and loss account will come down by the 4,200. Understood? Because this 4,200 is a we have adjusted to the profit and loss account. Here automatically we are adjusting to the profit and loss account. The profit and loss account automatically get adjusted if we credited here 4,200. Understood? Then here we can say we have seen the B adjustment number B. Anas had paid his debt of 5,000 in full. 5,000 in full, right? That 5,000, the amounts received from Aman and Anas are included in the total cash receipts for the year of 238,000. Right? 238 consists cash received from Anas. He has settled his amount. So if it is consist here, cash is involved. Already we have received the cash, in the sense we have credited. Okay, debtors account credited. So do we have to make any other entries? No. If we have made an irrecoverable account or anything, only we have to make an entry. Here Anas, we have nothing to do with the Anas here. For Aman, we have to make a double entry here because the amount had been included in the cash. Because of that, we already have written off, so we are receiving that amount. Because of that, we have passed this entry. So Anas normally cash account debit, latest account credit. That is the amount, right? E. Mohan was owing 8,000 and is doubtful debt. Mohan is to give back 8,000 rupees. It is regarded as we are going to see that as a irrecoverable, no, doubtful debt. We are going to treat this as doubtful debt, right? Anas, Aman, bingo, right? Here again, Mohan was owing 8,000 and is doubtful debt. Doubtful debt in the sense recoverable account debit 8,000 and allowance or provision for doubtful debts. Debt account. Here you say recoverable debtors account recoverable 8,000. This is made as Mohan. Okay, Mohan. It was decided, next one F is, it was decided to maintain the general allowance for the receivable 4%, the remaining balance debits. Remaining balance debits, on the remaining balance debits we used to provide the 4,000. Before that, we had to see whether Anas had paid 5,000, which includes in this thing what you call debtors account will have any effect. We will see. No, nothing. No, Anas had. Do you have any doubts? Because it is given to confuse you, because it will have any. It won't have any effect because Anas paid his debts of 5,000 in full. If we have mentioned this is provision had been made or anything only, we had to reverse the entries. Okay. Here they will say 4% on the balance. Okay. Then we have to add up this. Okay. Add up the 200 to 8 582,200. 5,000 582,200 582,200 minus 200, right? 200, right? 8 8 and 16 16 and 6 22 1 3 4 5 3 336,000, right? 200, 8 8 and 16 16 and 6 12 1. We had to carry it forward. 1 3 3 6 7 8. Okay, and 3 into 5 5. This is balance carried on. Okay, this is balance brought forward. 336,200, right? Here we will say provision of. I am going to raise this one, huh? Otherwise it will. I don't have any space here to show you. Okay, now we have made adjustments until this one, right? It was decided to maintain the general allowance for receivable 4% of the main remaining balance, right? Remaining balance in the sense this is the remaining balance 336,200, right? Mohan was owing 8,000, that we have made the adjustment. Okay, now we will say the remaining balance 4% on this is the specific adjustment, right? This charge is the for specific charges. Okay, 8,000 specific one. Here we had to say provision or allowance we'll say, right? Right, doubtful debt. Debt that is calculated like this way. Remaining balance 336,200 into 4%. Okay, that is amounting to how much? That is 336,000. Wait. 336 200 into 0.4%. 13,338. 13,338. Out of it, after this amount, we have to remove the general provision. This is general provision, allowance for doubtful, general allowance. Right, this is general allowance calculation. Right, this is general allowance for doubtful debt. 13,338 minus 13,300. Then remove specific allowance made. Remove 8,000. Right, specific allowance. Remove 8,000. Allowance on 8,000. Remove one. Minus, we will say, removal of writing of 8,000. Writing allowance for Mohan. That is, this is specific allowance, right? This is made as a specific allowance. Allowance, okay? Specific allowance. Mohan one is, that means 8,000 into 4 percentage. 8,000 minus 4. 8,000 to 4 percentage. That is 320. We have to remove 320. Okay. Then 13,400. Wait. We will see 13,000. 13,336. 13,000. 13,000. 3 lakh and 336 minus 200, no, into 0.4, that is 413,438, right? 13,438 minus 3,000 minus 320 means 13,180. Okay, minus 320, 13,128. Right. Okay, understood? 13,448 minus 320, 13,128. This is the general allowance. This is called general allowance. This is called general allowance. General allowance. Okay. General allowance of 13,138. So what you are going to do is, this amount is 13,128, and wait, will you? So this is the 13,120 is the general allowance. So what we have to calculate is allowance and provisions. This is the general allowance. We know we used to know how to calculate the general allowance, and at the specific allowance. At the specific allowance. This is the general allowance at specific allowance. Fic allowance. Specific allowance 8,000. This is the 21,128 is the total carried forward allowance. Total carried down allowance. Right? This is a calculation, right? This is how we arrive. This is how we arrive the total calculation. Right? So what you have to do is here you have to balance it. Okay, here you have to balance it. Here you have to balance it. Right? What we have said? We have said 21,128 should be the carried down balance. Carried down balance we say 21,128 and brought forward balance is 21,128, whereas the total greater side is here, credit side is greater side. So we do the needful additions for that. This is 400 and 22,400. 22,400. Okay, the difference is, what is the difference? Let me know the difference. Here you will say 22,400 minus 21,128. That means 1,272. 1,272 we are going to transfer to the irrecoverable debts. Recoverable debts. Okay, irrecoverable debts. So if it is going to be the debit, here we going to credit the recoverable debits 1,272. Okay, so you here balance it. 8 26,000, 26,000, right? 26,000 minus no, plus minus 26,000 equal to 20,528. This goes to the profit and loss. This amount goes to the profit and loss account, right? 20,528. Okay. 20,528 goes to the profit and loss account. So this 1,122 we received from the allowance or provision, allowance or for doubtful debts. 1,272. Okay, then we have finished the calculation for this one. Okay, understood this one? Have you understood? Because here it has been said that it was decided to maintain the general allowance for receivable for person of the remaining balance of debits. Remaining balance of debits, what this is the remaining balance of debits, 336,200. This is the remaining balance of. On that, we are going to calculate a fourth person. General allowance is 4%. 4%, 13,428. It is the general allowance. General allowance, which includes this specific allowance. Specific allowance means totally we are giving the provision, means 100% provision. This is known as 100% provision. 100% provision. 100% provision. 100% provision. Provision or allowance, right? Here, you know, this 336,000, right? We have a general profit, general allowance. That means only 4% on it. 4% on 4% on it. Only 4% of it. Right? 4% of it. Right? So here in this balance, 168,000 includes this 8,000. This 336,000 includes this 8,000. So we have to calculate the 4%. How much the 4% we have included? 8,000 allowance of Mohan. Specific allowance 4%. 8,000 into 4% is 320. This has to be removed. This has to be removed from the general. Then we are arriving at a correct general allowance. This is a 100% allowance. This is 100% allowance. 100% allowance. Allowance. Right? This is 4% of it allowance. 4% of it allowance. Right? So 4% we are removing that. Then this is the real calculation. That means 336,200 minus 8,000, and balance amount will come from that 4%. Calculate the 4,000, you will have this 13,128. Right? Then you have to add 8,000 because specific allowance. This is a general allowance. This is general allowance. Add the specific allowance. Add specific allowance, that is 8,000. Then total carried down allowance. We have manually we did the workings here. In these workings, you can understand how we have arrived here. This amount, right? This carried down balance is from here. We have calculated from here. Here. Understand? Or this is right. This is the 21,000. This is the way we have calculated this one. This 8,000 is here. We have added the 8,000. Okay. Understand? And this 36,000 is the only 4%. Okay. This 8,000 is here. we have this specific, right? Understood. Then here also like this 14,000 is the balance carried on. Here 14,000 balance. This for 6,500. Here 6,500. This balance of debit goes to here. This one you don't need to show. Okay. This one Mohan you have referred now. So we don't need to show that. If you mention the name, okay. Okay. This is the allowance here. This allowance here. Okay. 1,272. Double entry. Okay. This one is calculated. Okay. Allowance. 100% allowance. So this is the way we used to calculate it. Here also like that. So in the statement of balance sheet, under the current assets, current assets, receivables, you will show 336,000 and 200. 336,000 and 200 less allowance allowance for bad and doubtful debts. Bad and doubtful debts. Full debts. That is 21,128. If we deduct this, you will arrive at the correct debtors balance. 1, 2. Right? In that case, 336,200 minus 21,128. That means 357,000 minus, sorry, 336,200 minus 21,128 means 315,000 and 72. This is the carried down balance we'll have to show. In the statement of profit and loss, this is the balance. In the statement of profit and loss, income or revenue you'll say mention here, and less distribution expenses. Expense, selling and distribution. That means irrecoverable debts. Here, irrecoverable debts is credit balance. So we have to deduct it 20,528. 20,528. This is the credit balance. Okay. Debit and credited and debited to profit and loss account. Profit and loss account for 20,528. Okay. This is the revenue. Understood? I hope you all would have understood the thing. Main adjustment is general allowance and specific allowance. If you understand what is the general allowance and what is the specific allowance, it is very easy to tackle this type of questions, right? General allowance in the sense total debtors, carried forward debtors, they will say this much of percentage is allocated for the general allowances for doubtful debts, right? If they say for X or Y will be in doubtful, their recovery of amount this much of a 500,000 or something, 5,000 is recoverable is doubtful. Like here 8,000 Mohan was owing 8,000 and is doubtful debt. Then that is the specific allowance. Specific allowance we have to make. If total amount we are making the allowance, not the 4%, 100%, not the 4%, 100% we are making 100%. Right? This is the difference. Here we make 100%, right? 100%. Okay. Here 4%, 4% of it. That is the difference. This is 4%, this is 100%. That is the difference. If you could be able to identify that, if you could be able to understand, if you could be able to segregate that, it is easy. And here the examiner is very much tricky person. You here understand Anas had paid his debt of 5,000 in full. Anas had paid his debit of 5,000 in full. Whereas he has said in the note, the amount received from Aman and Anas are included in the total cash receipts for the year of the year of 2,330. Here 2,300 already included 5,000 receipt. So you don't need to do any sort of adjustment for that. Right? If you go and do the adjustment again, the answer is wrong. Whole answer is wrong. Means balancing all the things is wrong. A double entry may be correct, but because of this, your whole answer will get affected. Means this one also get affected, debtors balance also will get affected, allowance calculated, carried on, and everything is affected. So be careful. I hope you would understood the my explanation. And if you have any doubt and if you want to clarify anything, you can contact me. Okay. Okay, thank you.